Okay, hey everybody, Dan Fitzpatrick here, stockmarketmentor.com. We had an awesome training session this morning. So if you're a member and you did not have a chance to see that live, I think you definitely worth your while to do that. It went almost an hour and a half, and I talked about not just stocks, but we talked a lot about trading and risk management and some big lessons that it took me many, many times to learn that I'm going to help you learn them like just in the next time you try to make a mistake. So the bottom line is this: it's really important to be focusing on your trading game as opposed to the game of trading. So definitely check that out. Now, I want to look at AMC. As you guys probably know, this was one of, what's the dude's name, like Roaring Kitty, that really kind of crushed some short sellers a while ago. So let's look at that today. So you can see how this stock, after a massive, basically something that beat the snot out of all the dumbasses who buy something that runs up so much. I'm just telling you guys, this is not the way you want to be trading. If you're one of these guys that says like, oh, this Roaring Kitty and all that stuff, got to get in on that. Guys, that guy's selling into this stuff, making a crap ton of money on you trading the hope strategy and always thinking that maybe there's somebody dumber behind you that's buying the stock. And that just really ain't the case. Okay. So with that said, let's do this. We're zooming in a little bit, and I'm drawing this kind of line. Like the blue line here's the 200-day moving average. That's a key moving average that typically, if a stock's below the 200-day moving average, it's just kind of dead to me. And that's going to mean that I'm going to miss a lot of moves. But the way that I look at it is, if a stock is trading below the 200-day moving average, that just means that big institutions are not interested in buying that stock, because if they were, the stock wouldn't be lower than the average price over the last 200 days. It would be higher. So what's getting my attention here on this is just today, this pushed up above this key moving average. Now it's down below, but I'm seeing this as the potential for more of a push higher. So this would be my suggestion, is wait for the stock to break out, and it may not do this. So this is it's a possibility. Wait for the stock to break out above the high of 573. So maybe like set an alert at 575. And if the stock hits your alert at 575, we'll just put it in there. Okay. If the stock hits your alert at 575, then that's a time when you want to go ahead and consider buying the stock here, but you better use a tight stop on it. Until the stock breaks through 575, then guys, obviously by definition, you've got 6.8% upside if the stock runs up here. The way that I look at this is the potential for a much greater move than 6.8%. Again, just the difference between here and this high. The potential for that is a lot greater once the stock breaks out above this level. So my suggestion is just kind of watch it, wait for it. If the stock comes to you, if the stock breaks out, that's when you take the trade. But until or unless that happens, this is just another stock to watch. Okay. All right. That's all I got for you. Hope you all have a great day, and I'll see you next time.